Welcome to the Heart-Centered Sales Leader podcast on webtalkradio.net. Of course, I'm your Heart-Centered Sales Leader and host, Connie Whitman. Thanks for joining us today. So on this journey of my mission or my movement that I'm trying to create, where that word sales, we need to eliminate it from that icky, sleazy perspective and really create one of love, joy, and respect for our clients and for ourselves. So to help you on that mindset shift, I have a free gift. Go to my website and take my communication style assessment. It will show you your natural communication superpowers. It'll also tell you show you what your lowest style, or the style that's a little bit more difficult for you to communicate with. Real important information, helps you navigate all of your sales conversations with a little bit more ease, respect, and coming from a place of fun. So whitmanassociates.com/CSA, my gift to you. Now, my motivational quote today is by Fred Wilson, and Fred says, venture capital is about capturing the value between the startup phase and the public company phase. So each week as I sit and, start to write my introduction for the podcast and reflect on just how lucky I am that I get to have amazing guests like my guest today so that we talk about all these different topics. Well, I'm going to be honest. Today, I am openly admitting that I am not an expert on our topic today of venture investing. And this is one of my favorite parts about hosting the show is I get to share thought leaders, right, and with businesses like you guys, while also helping, including me, to broaden our view of what's available for businesses around the world. So just what an exciting time to be a podcast host for me. Now, today my guest is Steve Hoffman. Steve has had more careers than cats has lives, from Hollywood TV exec and game designer to manga rewriter, voice actor, animator, electrical engineer. He's studied head and video game designer. He's the Renaissance man for today. He's also the captain and CEO of Founders Space, one of the world's leading startup accelerators. Founders Space was ranked the #1 incubator for overseas startups by Forbes and Entrepreneur magazine. And Steve is also a venture investor, founder of 3 venture-backed and 2 bootstrap startups, and author of several award-winning books, including Make Elephants Fly, Surviving a Startup, and The 5 Forces. Please help me welcome the amazing Steve to the show. So Steve, thanks so much for being on.
Thanks for having me. It's fantastic to be here, Connie.
Yeah, exciting. Okay, so seriously, Steve, this is so not my jam, so not my wheelhouse. I get real excited when I'm in a position of learning because I get to put the hat on of my listeners to say, if I don't know, how many other people don't know. So I'm real excited about our conversations. I'm sure I'm going to ask some silly questions, but be kind, which I know you will be. He's a delight.
I love silly questions, so fire away.
You got it. All right. So my first question is, how do you take the investor, how do you talk to the investor in a way that will get them to commit to a deal?
So this is something a lot of entrepreneurs struggle with. They get so many, and I was there. So the first time I tried to raise venture capital, I did 3 venture-funded startups in Silicon Valley. The very first time took me over a year to raise capital.
Wow.
And then my second time, I got it down to half a year. And the third time, I got it down to 3 months.
Wow.
So, yeah, and before I closed to Series A. So really, closing venture capital is a challenge for most entrepreneurs, and they don't know how to do it. So there's a lot of myths out there, what people assume to be true and what's actually true. Everybody tells you, create an investor deck. So it's a PowerPoint, 15 slides, goes into everything about your business, what product you have, who the customer is, the market size, all that stuff. And then they try to get a meeting with an investor. And usually when they meet with the investor, they walk them through the PowerPoint. Well, I tell entrepreneurs, don't do this. Don't go in, because investors see a million PowerPoints and it gets tiring. And what an investor really wants, more than anything, is to have a conversation with you about your business, a two-way conversation. The problem with PowerPoints is they suddenly put you in a position where you are presenting to them. So it's a one-way conversation.
Yeah.
And if you really want to get somebody excited about your business, just presenting to them isn't the best way. Actually engaging with them in a deep conversation about what your business really is, getting their input and their ideas, that creates the momentum and the psychological shift in their brain where they become much more willing to close. Now, I can go further on this because there are a lot of different steps involved in the closing. And first of all, getting an investor to understand what you do, and then also the closing process.
And I do want you to get deeper into it. So this is fascinating, right? So I'm always, because what's the perspective I have? My life, my business, my career, right? We always go back to our own reflection. So what you just said is just so critical, I think, in business, period, Steve. And that engagement, we talk at each other instead of having a conversation with each other, which, oh, by the way, is so much more fun. I just want to share a really quick story, which I think people can resonate with on the business development side as well as this getting a venture capital. So many years ago, I walked into a client. They were in Connecticut. So it's about 3.5 hour ride for me. And I walk in and the CEO says to me, "You don't have a PowerPoint?" I'm very professional. You know this, Steve, about me. My response was, huh? So I said, I don't have a PowerPoint because I don't know what you need from me. I can do A to Z. What if you need L, M, and N? By the time I get to C, you're checked out. You're bored. And he looked at me and he said, we had 4 other vendors come in and they all had PowerPoints. And he looked at me and he tilted his head. And Steve, in that moment, I thought, I have the business. This is the craziest freaking thing that's ever happened to me. We sit down and I explain I had a packet, then agenda, I had questions. And then I wanted to have a dialogue so we could figure out, are we a good match for each other, let alone what you're trying to create, what I can do, right? And finding that synergy. So before I left, they didn't have my price sheet or anything, Steve. They signed, the CEO said, yes, sign her up. Do it, whatever she needs, you do, because she's exactly what we've been looking for. And on the drive home, I thought, they don't even know what my prices are, right? This is the coolest thing that has ever happened to me. But it was about engagement. And as he was leaving, and this is the cool thing, he turns back, says to me, "Hey, Con," I'm like, yeah, what's up, Mark? And he said, "You see what you did with us? Can you teach my people to do that?" Engagement, right? That's what the clients are going to buy. That's what the clients are going to support. I think it kind of is the same thing, right?
It's exactly the same thing. Yeah. So what I'm telling you now to sell to venture capital is true of all sales. And it's true especially when you do business development and really transformative large deals. Yeah. This is the best way to go about it. Now, I tell people, make your PowerPoint. Like, make the PowerPoint so that you know the stuff. And there will be times when you will need the PowerPoint. Mm-hmm. For example, if you're pitching to a room full of people, like a group of people, then a PowerPoint is really useful because it's very hard to have a conversation with a room full of people.
Sure.
So what you want to do is first show them your business, and it's more a presentation, and then you open it up to their questions. However, when you're sitting down one-on-one with an investor or even 2 investors and much better to have a dialogue in those cases.
Love it.
The other thing I like to tell entrepreneurs is there's different psychologies going in to meet investors. So one psychology a lot of people have is, I got to sell them on my company. I have to sell them my vision. I have to, get them to buy in to what I'm doing. After all, they're going, essentially it's a transaction. They're going to be buying the shares of this company.
Yeah.
So they go into sales mode, what they think is sales mode. And sales mode, I tell you, that's wrong. Like, you are not don't try to sell the investors on your company. Don't try to sell them your vision. What you really want to do when you engage investors is you want to find out if it's a good fit for them. And you want them to understand your business. So it's about not selling, but helping them as quickly as possible to understand exactly what you're doing, what value you're offering, so that they can make the best decision for them. And if you have that attitude, like, I'm not out here to convince you to give me your money, I'm out here to help you understand my business and see if it's the right opportunity for you, then the tone of the conversation is totally going to change. Like, it's more about,
Absolutely.
like, what do you want to know about my business? How can, making sure you really understand the core of my business and what the value we're creating here. And equally listening to them, like, what are you looking for? Because if they're ultimately not looking for what you have, you're better, you will have a better relationship with them than trying to force your business upon them. To form a good relationship with them, have them understand, and then they're more likely to refer you to somebody an investor who may be a good fit because they like you. They're engaging. Maybe it's a lot of these investors, their funds have a focus. And if you're outside their fund focus, they've already sold this focus to their investors.
Absolutely.
So they have to stick with their focus. If you're outside their focus, they can't deviate from that. So no matter how hard you try to push them into buying into your company, if it's outside their focus, it's not going to happen. But you can have a great relationship. You can also, and this is the big win. So a lot of entrepreneurs are like, well, I wasted my time. They didn't invest. Like, I've talked to yet another investor and I wasted my time. Well, you wasted your time because you were trying to sell them on what you have, and they didn't buy. So that's a waste. But if you had approached it not to sell them, but I want to tap into their brain. Think about it. These investors are super smart people. They didn't get to be, they're either angel investors and they've become rich, so meaning they've run their own companies or done investment that's been very successful, or on the venture capital side, they're on the boards of lots of startups. They're seeing everything that goes on. If you had to hire these people as a consultant, you would pay them, $1,000 an hour or more to tap into their brain. Yet they're sitting with you, for an extended period of time, focused on your business. Are you going to squander this by simply trying to convince them to invest? A much better strategy is to make it a learning opportunity for you. Make it a chance for them, like, listen to them, like, ask them questions.
Yes.
Don't just have them ask you. I mean, it's great if they're asking you questions, right? Because then that means they're really engaged and you're focusing it on the areas that matter to them. And at the same time, when there's an opportunity, ask them, like, what are your thoughts on this? Where would you go? Have you seen other companies in a similar market? What do you think of my business model? Is that the best business model? You should have these questions that you really want to know about your business, and you will learn so much. So, like I said, if they don't end up investing, you haven't wasted your time. You've received a lot of valuable information and free consulting you didn't have to pay for at the end of that conversation.
And it's perspective, right, Steve? That's, to go in and I wasted my time, I didn't make the sale, versus, oh my gosh, I got all this great information. I really like that guy. I think he liked me. And you're getting a call a month from now because angel investors or investors, right, talk to each other because they're sharing, hey, it's not our focus, but I know this is your focus. Just like businesses talk to businesses, right? I'm a Jersey person, right? I know you know this about me, Steve. So, and I tease because I always say to my community, I got a guy. Please ask me because I vetted them. I trust them. I know they're not going to rip you off. I got a guy. It's the same thing, I would imagine. Isn't every industry actually kind of small, right?
There is the venture community, in particular in Silicon Valley. Everybody knows everybody.
Yeah.
And they all talk about their deals. And they're all referring deals to each other.
Of course.
So, because honestly, they get so many pitches, they can't weed through them all. But if there's something, so they're relying on each other as filters. And they're helping each other. Like, they're bringing each other into deals or referring deals that might not be right for their fund, but is perfect for another fund. Happening all the time. So making these relationships and really bonding with them, really important. Now, one thing I tell people, don't do that superficial bonding thing.
Yeah.
A lot of people go into these meetings and they're trying to find some commonality, like, who do we know together? And they're throwing out a ton of names, or, what do we have in common? We both like, outdoor sports or hiking. Those things, you can do that later if you're at dinner with them and, like, hanging out. But when you're when they invite you in to do a pitch, bonding isn't just about, like, do you know somebody in common, or do you share the same interests? Bonding is about them understanding who you are, understanding why you're doing your business, having a really great, intelligent conversation where they're learning something about your industry because you're the expert there, and you're learning from them their perspective, that you can. And venture capitalists are busy, right? Like, you only get so much time with them. You may get half an hour, you may get 45 minutes, maybe more, but it's a limited amount of time.
Sure.
And so what they want, you have to be respectful of what they want. Their time is valuable, their most valuable thing. And what they're doing is trying to figure out, is this worth putting more of my time into? Or is this something that I quickly want to pass on? So that I can go look at other deals, because the more deals they can go deep on, the more chance they're going to find that golden goose that lays the golden eggs. That's what they're hunting for. So you want to be, if you're going to have if they're going to like you, you're going to be very respectful. You're not just going to bullshit. You're about the weather or whatever. You're going to dive right into the business.
Yeah.
That's what they want to know. You're going to go deep, and through that conversation, they're going to see who you are, why you're doing this business. How you solve problems, and that's enough. That's what. And then when they're done, later, if they invite you out to dinner because they're interested and you're going, that's when you do all the other type of
Sure. Don't be see, that's the sleazy, right? I got to go in and be charming. Just be yourself, right? If you're
not interested in how charming you are, they're interested in how good at what have you figured out in this business.
Yeah.
How smart are you? Like, how capable are you?
Yeah.
Not can you charm them or do you have friends in common. It doesn't matter at the end of the day.
Yeah, and at the end of the day, I love how you said that. Really, it's about engagement, and it's a human being with a human. Can we collaborate? And can we make money on this? No, and if they say no, I pass. You can't take it personally, I would imagine, right, Steve? You have to have a bit of a thick skin.
Yeah, and what you learn is, at the beginning, rejection is hard when you're first starting to sell. It was hard for me too. I was a terrible salesperson at first, actually. I had to learn all this, which made me consciously think about all these things.
Sure.
But you have to understand that it's not a rejection of you.
That's right.
It's only a rejection of you if you think that what they're buying is your personality, your charm, whatever. They're not buying that. They're looking for somebody who has figured out a really amazing business and can execute on that.
Yeah.
And it's what they're judging is your business's ability to succeed and make money. So it's not, if you think it's about you, then you are only hurting yourself. You need to understand that my job is not to make myself look great. This has nothing to do with me. My job is to let them see what I'm doing. And if that's of value to them, then they will go after it. If it's a good fit for them, they'll go after it. And if it's not, they won't. I'll find somebody else.
Yeah, absolutely. And here's the thing. There's plenty of opportunities out there. You just shine, because you're going to get the introductions, right? The universe provides when you show up with an integrity and you show up with clarity and all of those things. The opportunities really do find you, like, magnets, right? Finding each other. I know you talk about the princess and the frog rule. Tell me, I don't know what that is. So can you explain that?
I will tell you. So this is my philosophy, and I write about this in Surviving a Startup. I write about all this, like the psychology of investors. Like, we can go into that after.
Sure.
But let me tell you one of my golden rules. And my golden rule is that my first startup, where I tried to raise money, when I engaged with investors, I would engage with them. They would seem interested, but they were on the fence. So a lot of investors, they're on the fence. They just can't decide whether to invest or not. They have a lot of deals, right? And so they keep you in this limbo area. And they keep asking, like, I had one investor in the first venture funded startup I did, before I'd raised any venture capital. He was like the only one who was super interested, and he would call me up on a weekly basis, and we would talk, and he would ask for stuff. And every time he asked for something new, I think, oh, when I give that to him, he'll end up closing. That will be the thing that pushes him over the edge. It never ended. It went on for 9 months. And at the end of 9 months, he never invested.
Oh.
So it was brutal. And you can get this with large corporate sales. You can get it with anything, right?
Sure.
It seems like they're going to do it. And they always have something new. They always have a reason that, they're not quite ready yet. So I have a rule. And the rule is that you want to maximize your chance of closing a deal. And honestly, for most deals, even very large investor deals, like investors, like, if they like your company, they will decide quickly. Because if they really like your company, they are worried somebody else also really likes your company, and they'll step in and take the deal out from under them.
Yes.
So usually, and this is rules of thumb, they're just generalized, right?
Sure.
But on average, the first time you pitch an investor, the chance of closing is really low. The second time you pitch an investor, it goes up a little. They're still in the information gathering mode. The third time you meet with them and pitch an investor, that is where it starts to peak. The third and fourth time, it really start to peak. And then after that, it starts to plummet, go back exponentially down. By like the 10th time you're meeting with that same investor, I tell you, it's a really low chance that they're ever going to close. The more meetings you have, the more information you give them beyond a certain point, they're not going to make a decision on it. In a way, they've decided not to decide.
Wow.
So the frog and the princess rule is, you want to find your Prince Charming, that investor that will carry you away and make all your dreams come true. But what you have is frogs. Every investor is a frog. So you kiss this frog, and you kiss the frog, hoping that this frog will turn into Prince Charming. Well, my rule is kiss the frog 3 times, your third meeting. And if the frog hasn't turned into Prince Charming after 3 kisses, it's just a frog. Move on. Get rid of that frog. That is not your Prince Charming.
I love it, because we all know that story, and that just makes so much sense. Because the decision making, I love how you said that, because they're looking at so many deals. They have to get really good at their decision making. Otherwise, opportunities could lucrative opportunities could be slipping through their fingers if they do the paralysis analysis. So that's funny. A frog is just a frog sometimes. Yes, for sure.
And I liked, there's other things. So my first venture funded startup, I finally got it closed. So I'll tell you a little story.
Okay.
That one investor never panned out. I met a bunch of other investors. One of them was a venture firm in LA, made up of big Hollywood people, like, heads of studios, all these big Hollywood hotshots. Michael Milken was on the board, all these people. And I pitched them, and they were like, we will do a deal with you. We'll give you the $5 million you need for your company. And I negotiated the whole deal with them, like literally, right? The entire deal, dotted every I, crossed every T, ran up $60,000 in legal bills. And they, at the end, we had the contract done. I was like, okay, let's sign. You know what they said? They said, we want to wait until your product launches. Like, this is pre-launch, like I had got them to commit. They said, we want to wait until your product launches. I was like, well, you're giving me a lot of money. I understand. So we'll wait 2 months. So we waited 2 months. The product launched. It was successful, like I had told them it would be. Went back to them, and I was like, okay, we need the money. Like, we spent all the money we had. Like, we had gotten $350,000 from Viacom to build out this product, and now we wanted to take it to all the other TV studios, and we're like, give us the $5 million. We're totally out of money. They said, okay, we'll give you the $5 million, but we want to do it at half the valuation we committed to earlier. Half the valuation. What had changed? We launched a successful product. We had done everything we said we would do. What had changed is they knew we were desperate for money. They knew they don't call them vulture capitalists for nothing. So they knew that we'd spent our money, and we didn't have any other investors online. No other investors as backup. Like, I thought it was a done deal, and I thought when the product launched, they would just give us the money like they promised. Now, I had a choice. We were either going to go off a cliff potentially because we had no money.
Sure.
And to make the matters worse, it was, Thanksgiving, basically. It was literally right before Thanksgiving. Then came Christmas. Literally after Thanksgiving, all the venture capitalists go home. They don't even come back into operation until, mid-January at best. So there's like at least a 6-week point before I can even engage new investors and get them started on the closing process. And I had just spent months and months and months with this investor. I was like, what are we going to do? We have to take their money. But at the same time, they'd stab me in the back. I was like, do I want to be in bed with people like this?
Yeah.
Do I want them on my board of directors?
Yeah.
And you know what I said? No. We decided we don't. Screw you. We would rather, do whatever fate has in store for us,
Yeah.
We're walking, right? So we said, screw you. We walked. Didn't take their money. Well, as soon as it felt really good to walk. But after we had walked out the door, we were like, oh my God, like
What have we done?
Employees. We can't pay our, co-location facilities. We have no money. So we had to ask all our employees to work for free right at Christmas time, literally, but you can't give up. Like, you have to keep going.
Absolutely.
So I managed over this 6-week dead period to get a meeting with the president of a company called Macromedia, which is now Adobe. So this was the precursor to Adobe.
Wow.
Yeah. And I sat down with him and I showed him our product. It was synchronizing broadcasts on air and on television, creating a new type of application. This was in the .com days, my first startup. And he was looking, and he basically looked at it and goes, can you make this work with Flash? Flash was their new product from Adobe, Macromedia. And I said, absolutely, we can do it. We will make this work with Flash. And can you give me the money? And he goes, well, we need a lead investor. Like, we follow. So what I learned in investing is that anybody who follows, they're not the lead. You can't close them. Like, he goes, our corporate policy, we can never lead. You need a top tier VC firm on Sandhill Road. You're not just any investor. You need a top tier firm. Like,
wow.
So all I could do is say, can you introduce me to some? Because I had trouble getting in the door to them. And I didn't know anybody at the time, my first startup like that. And he said, okay, well, when January, the new year comes around, by that time, maybe a couple weeks after, I'll make some introductions. So I had to wait. So we waited through this period, totally desperate, running on fumes. He walks us into one of the top VC firms on Sandhill Road, which is where all the top VC firms in the world are. And I sit down with the investor, and he actually comes to the meeting. Like, why is he coming to the meeting with me? I'm thinking, doesn't he have better things to do as a president of this big company? Well, he wanted to see the investor's reaction, because if the investor was excited, he would, even if the investor didn't invest, but they were excited, he would introduce me to other investors. But if the investor found a reason that this is a bad deal, he would know to walk away before embarrassing himself. So he's smart, right? He doesn't want to put his reputation on the line with other people. So walk into this meeting, it's like all the pressure's on. You can't ask for more. So I pitched this guy, and of course I don't say we're running on fumes, because last time I did that, the results weren't so good. So I just don't talk about our finances. I just talk about our business, all the great things. We have this deal with Viacom. We have all this stuff. We've developed this whole product, cutting edge product. Give the whole pitch. The investor is stone-faced, can't read them at all.
Oh, no.
At the end of the pitch, the investor goes, excuse me, I have to go. And he gets up and walks out. And I'm sitting there like, oh my God. I go, this is the end. I've totally blown this. One moment. Can you cut this?
Yes.
I don't understand what's going on.
That's okay.
Turn off the thing. So you can cut that.
Yes, I can. Don't worry, Steve. We're good. We're good.
Why is this thing going?
That is so funny.
What? I don't understand.
It won't let you. This is a blooper reel.
Okay, whatever.
That's all right. Okay, so he's stone-faced. Go ahead.
Yeah, and he walked out of the room. The investor walked out of the room. I'm thinking, what's going on here? Like,
I've lost it all, right? I've lost it all.
Yeah. And I'm waiting. He comes back a few minutes later, and he looks at me, and he sets down a piece of paper and goes, I don't want to give you $5 million you asked for. I want to give you $7 million.
No kidding.
I was like, what? I was desperate for anything. And he wanted to give it to me at the valuation I had asked those previous investors, which was a really high valuation.
Yes.
He goes, valuation, no problem. I was like, I wanted to say, run up and hug him and say yes. But I caught myself. So this is closing a deal. I knew the most important thing to me was whether I had 5 or 7 million wasn't going to make a difference. The most important thing was that I had that money in the bank yesterday. I needed that money in the bank right away. But I couldn't act desperate, because when you're desperate, nobody wants to invest in you.
Absolutely.
And at the same time, I started to think, why is he giving me this money? And what did I do right here that I'd never done before in my sales pitch?
Yes.
And it dawned on me. The president of this company that made the introduction is in the room. And during my pitch, I had mentioned he's going to take me to see other investors. You are the first one. I realized that when I said that, even though he remained stone-faced, in his mind, what he was thinking was, oh my God, this guy's going to walk out of the room and he's going to get funded by, this is a great pitch, he's going to get funded by somebody else. Like, that's what he's thinking. What you need to close these deals is, this is another golden rule. The fear of losing the deal has to be greater than their fear of losing their money. If you can make them more afraid of losing the deal than losing their money, they will close right away on your first pitch. Like I told you, it's really rare that you get a term sheet on the first pitch, especially for a huge amount of money, like $5 to $7 million. Like, they usually don't do it. But when they think you're about to walk out the room and somebody else will jump on this, they'll pull out the checkbook. So he literally pulled out the checkbook. So he's offering me $7 million. I asked for $5 million. I want $7 million. But what do I say? So at this point, I realized I just need that money fast, but I can't be desperate. So I say, I don't need $7 million. Of course, I need $7 million or want $7 million. I only asked for $5 million. But I will tell you what, I will take $6 million. We'll split the difference if you can close the deal in 2 weeks. Can you do that? I'll do that. He said he'd do it. Because writing the lawyers, these are complex contracts, right? Just getting your lawyers to respond. I go, you can get your lawyers to get through this deal in 2 weeks? We can do it. Literally, he lived up to his word. He got the deal done in 2 weeks. In 2 weeks, we had $6 million in the bank. That saved our company.
But here's the thing. First, couple of things. One, the integrity to walk out of that first deal by when they cut the valuation in half, right? And I want everybody to really hear this. No matter where you are, what you're doing with your business, being in integrity is really important. And not getting in bed with the sleazoids because you're desperate, I think took tremendous courage, Steve. Because when you have bills, like you said, you were asking your employees to work for free. But if they believed in you and your vision, right, people buy into that idea of success, but that you were the right leader and all of the things. And that's why they agreed, I'm sure, because you're a good guy, you're in integrity. They know you're not going to take advantage of them, right? So you get that first, that buy-in. And then, like you said, walking away, but then feeling sick to your stomach, like, what did we just do? But you get what you pay for. So, you know, sometimes that penny wise, dollar foolish that we'll just take what we can could have been an absolute disaster. Fast forward, you find the right investor, the right opportunity, took a little bit longer. But now here's the thing. Quick question for you, right? It's how my mind works. Had you taken that first investor at the lower valuation, what would that have caused you, or what would you have lost because of waiting for that right match for you? You know?
So you never know what you lost for waiting for the right match. I mean, I don't think we lost much in those
I don't need
6 weeks.
Yeah.
In this case, but what we would have lost if we had taken that deal was we would have had these people on our board that we never trusted.
Yep.
That we could never trust. How can you? These are your partners. When you take money from somebody and they own shares and they're on your board, they actually, a lot of these deals, they can remove you from your position. Now, do you trust these people, like, to remove you from your own company? Do you want, even if they don't have the power now, as you dilute, they can gain that power, like as more investors come in. So they get more board seats and they can outvote you.
Wow.
So do you want to be in bed with in the long run? It's disaster.
I agree.
I've had bad partners before, and no matter how it can solve any number of short-term problems, but it always ends up worse in the long term.
Yeah.
So if there's any lesson I learned, do business with people who have integrity, people you trust, and walk away from deals no matter how great they seem, if there are any warning flags like I had. And, you know, I looked back on that relationship with the investor when we had negotiated the entire deal, and we had, you know, gotten everything ready, and they said, wait 2 more months. I should have known right then. So I should have basically told them right then, you're not ready to sign. I'm out of here. Like, you guys said you were going to sign this deal. You're not ready. We don't need you. That was the first warning flag. And I didn't pay attention because I didn't know. I was naive at the time.
But that's the learning experience too, Steve, right? And that's, you know, like I said on the onset, I don't know anything about this topic. I've never looked for any type of venture capital, so I've never been exposed to it. This is fascinating to learn, but everything you've said, I think, is true in business, right? If the deal sounds too good to be true, something's, you know in your gut, right? At that, oh, wait, 2 months. Had you said at that point, you know what? We know we got something good. We're going to look for other investors. You didn't have the confidence to do that because you're not the man you are now when you're starting out, right? So all of these experiences, and we're out of time, but I so thank you for coming on, because I hope this has put a little light on the opportunities that are really out there of people, if they really have a good business that they know is going to be lucrative and make money. And if they could get in front of those investors so that find the synergy, find the good match, right? There's plenty of venture capitalists out there. But all of what you said, I think, is business basics that you just said so beautifully, with the overlay of, guess what? Business basics works with the venture capital world too. And like you said, it's a very small community, so that if you can be in integrity and be yourself, be authentic and real, even if I'm not the right investor, but I like you because you're a good guy, right? I know you're a good guy. You really believe you're going to make money. I think your project's going to make money. Not my focus, but hey, I have Steve down the street who's a perfect match for you. You get the introduction. You reap what you sow, man. I really do believe that, right? And when you're authentic and real, I just think good things find you. So thank you for sharing your zone of genius with us. I've learned so much. Really, really appreciate our conversation.
Thank you, Connie. And if anybody wants to reach me, super easy to find. Just go to founderspace.com, Founderspace, and you can contact me there. We also have tons of videos. We have online startup kit, all these different things for investors. We have a free special offer for your listeners. So they can go to founderspace.com/10, TEN, or the number 10, and they can get the 10 commandments of raising venture capital. So it's additional information that will help them out.
Thank you so much. You're just so generous. Thank you so much for that.
My pleasure. And if they want to find out about my book, Surviving a Startup, just go to survivingastartup.com or go to Amazon. It's everywhere. And you can also reach out to me on LinkedIn. I'm on LinkedIn and all the social networks. So
here's the deal, everyone. And thank you. That was great, Steve, for just sharing that. Website, founderspace.com. I'll put that in the show notes, and so you can immediately find him. I will also put the free gift, the /10. So if people want to go check that out, thank you for sharing that. And I will put Steve's LinkedIn profile as well, so you could connect there if you have specific questions. Additionally, in the show notes, everybody, the 3 books, Make Elephants Fly, Surviving a Startup, and The 5 Forces will all be listed on there as well. And I think you sent them to me backlinked, actually, Steve. So if that's the case, in the show notes, I'll maintain that, and then they could literally go, it'll take them, I think, directly to Amazon. I will double check that. If not, they will be listed in the show notes. So thank you so much. Yeah, really a pleasure. Thank you so much for being on. And I know we had to wait a little while to get on my show, but so appreciate the information. And I loved that story. I just feel like I learned so much just from that one story. So thank you so much for sharing your resources. Always a pleasure to see you. So thanks again, Steve, for being on. And I hope you will join me weekly as we question, build, and discover together that being heart-centered and being a heart-centered leader in whatever industry you're in really makes a difference. Come from that heart-centered place, that authentic place. It really does make a difference. You heard from Steve and his story today. Thanks for tuning into the Heart-Centered Sales Leader podcast with me, your heart-centered sales leader and host, Connie Whitman, on webtalkradio.net. I truly am honored to have you all on this journey with me. And I do hope that my guests and I provide tips and strategies and resources like the books and the free resource Steve shared today. I do hope it helps you on your journey of growing and scaling your business. Again, I'm honored to have you on, and I'll see you all next week. Thanks so much for tuning in.